The CEO, Jensen Huang, expects sales now to top $500 billion in 2026. And as Ed Ludlow told us, that's without factoring in any Chinese sales at all. A big donut for China. So if those talks go well, the sky's the limit here. Huang also told Bloomberg he doesn't see artificial intelligence in a bubble.
I don't believe we're in an AI bubble. And the reason for that is we're going through a natural transition from an old computing model based on general purpose computing to accelerated computing. We also know that AI has now become good enough because of reasoning capability, research capabilities, its ability to think. It's now generating tokens and now generating intelligence that's worth paying for.
So Bloomberg Tech co-host Caroline Hyde joins us now, and that's really not news. I mean, that's NSS, right? Jensen Huang, obviously.
I have to explain NSS on your LinkedIn or on your X profiles later.
I mean, just check out NINSS on the Bloomberg terminal, users. And you'll understand. It would be news if he said they were in a bubble, yeah. But clearly Jensen Huang isn't going to say that.
And look, others have been saying maybe we're in a bubble. Look, Sam Altman himself has said he thinks we're in some sort of AI bubble. Bill Gates added to that chorus yesterday on other networks saying he thinks we're in an AI bubble. Some will be winners, some will not be paying off for the amount that they're currently spending. But what we're seeing at the moment is that a few key companies are deemed the winners of this entire super cycle. Nvidia, the main one, $5 trillion. It's up 50% year to date. It is therefore, thank you S&P 500 run, because it's making up a fifth of the entire gains of this year. $5 trillion is extraordinary considering it was only 4 months ago. It hit $4 trillion. But now we see the other players coming out, and the CapEx story is going to be so important. After the bell, you're going to hear from Alphabet. We know they raised last quarter to $85 billion per year in terms of capital expenditures. But that's going on things like Nvidia chips. You're going to be hearing from Meta, which in itself is becoming a hyperscaler of choice in many ways. It's about compute, where is their capital expenditure going? And then you've got Microsoft, the juggernaut that Bloomberg Intelligence thinks is going to raise it all the way to $130 billion for their next fiscal year for capital expenditure. That's about the entire value of their OpenAI stake as well. We're seeing just the amount of money flow in because for now, the revenues are also rising. The money is being generated for these particular companies.
Nvidia has a market cap of about $4.59 trillion, a P/E of 46.86, a PEG of 0.92, and a beta around 2.31. These aren't tiny metrics, they're the headlamps charging at full brightness. The stock's 52-week range runs from $86.62 to $212.19, and liquidity metrics look strong. Quick ratio 3.71, current ratio 4.47, debt to equity 0.06. The technicals: a 50-day MA near $186 to $187 and a 200-day MA in the high 170s. If you want the receipts for those numbers, the market feeds confirmed them this morning. Nvidia didn't get to be the biggest market cap in history by accident. It's not just a GPU company, it's the plumbing of modern AI. From gaming to generative AI to data center inferencing and autonomous systems, Nvidia's accelerators run a great deal of the heavy lifting. The company's software stack, the developer ecosystem, and domain-specific optimizations, hello CUDA, create a moat that's part code, part habit, and part infrastructure. The market is currently pricing in multi-year dominance, which is why the valuation multiples are demanding. If the world's AI programs are skyscrapers, Nvidia built both the cranes and the blueprint library. You don't just rent cranes for a day, you lock in contracts for multiple projects. That's the economic story markets are buying. The good stuff, real balance sheet muscle. Let's be blunt, Nvidia's balance sheet looks like something you'd bring to a duel. Quick and current ratios north of 3.7 and 4.4 respectively show they can cover short-term obligations many times over. Debt to equity at 0.06 means leverage isn't stalking the company. In a capital-hungry chip world, being cash-rich matters. It fuels R&D, capacity reservations, buybacks, and strategic M&A. Those high liquidity ratios also let Nvidia play a long game even if macro winds blow cold. Imagine a ship with 3 engines while everyone else has 1. You can outrun storms, change course quickly, and still keep the lights on in the galley. The price tag: why bears are shouting from the rooftops. PEs in the double digits aren't a problem, PEs priced for continuous miracles are. Here's what'll keep you up at night if you're long: valuation. A P/E of 46.86, historical, is not pocket change for a company that's already the biggest in its sector. The bear camp argues, loudly, that Nvidia is priced for perfection. They say the market is already paying for uninterrupted, blockbuster growth well into the future. Miss the beat, even by a little, and the math flips fast. Think of Nvidia like a skyscraper with a price tag that assumes every floor will rent at top rates forever. If rents dip, even modestly, investors start repricing the building. By the way, if you are finding this content resourceful so far and want more like this, like the video, it means a lot to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. This is amplified by a beta of 2.31, meaning Nvidia tends to swing hard with the market. If the tape turns skittish, Nvidia's stock likely drops faster than its cash flow. The technicals and momentum, the immediate tug-of-war. 50-day above 200-day, momentum says, go, but the range dances with caution. Short-term technicals are telling a story of momentum, price flirting with the 50-day MA, $186.6, and the 200-day MA, $178.5. That's a classic momentum zone. Traders will cheer a tight hold above 50-day and scream if the 50 dips under the 200. The 52-week range shows both extremes, from $86.62, fear, to $212.19, mania, meaning there's precedent for both big runs and deep corrections. If you like heated intraday action, Nvidia serves it up every session. NVDA's 5200 lines are like two X's. If they cross, the drama gets real. Who's still buying, and who just shaved a sliver? Institutional flows matter. Recent 13F type activity shows large holders buying and trimming. For instance, Moggy Joel, our investment counsel, slightly lowered exposure by 0.6%, still holding 1.38 M shares and making Nvidia its largest single holding, a sign that some deep-pocketed managers are trimming but not fleeing. Big holders reducing by a hair doesn't equal capitulation, it often equals rebalancing or tax-chopped repositioning. But if big holders start dumping meaningful percentages, that's a different story. Institutions treat Nvidia like a blue-chip anchor. You trim to raise cash for other buys, not because you admit you were wrong. The bear case, 3 knockout arguments, short, precise. Valuation is intoxicating. The price expects near-perfect execution for at least several years. If ASR, actual sales/results, slip, expect savage multiple compression. Miss a quarter or deliver conservative guidance and the tape will punish. Data sources reiterate this concern. The market is crowded with expectations. Big tech building their own chips, Amazon, Google, Meta, they're not just customers, they're potential competitors. If hyperscalers successfully ramp in-house accelerators and reduce Nvidia dependency, the company's dominant share could erode over time. While Nvidia's current share estimates are massive, think 70 to 90% in many workloads, a longer-term shift toward in-house silicon is a credible threat. AI hype plateau or slowdown. If AI deployment slows, or proves less monetizable than expected, hyperscalers could throttle CapEx and GPU demand. A bubble narrative could trigger reversals, particularly brutal for long-duration tradables priced on future growth. Reuters and market watchers are already talking about inflation, CapEx cycles, and the danger of overbuilding in AI, all macro murmurs that can turn into real selling pressure. The bears say Nvidia is like a blockbuster movie with the sequel already in production. If the first act underperforms, the franchise value tanks. The bull case, why the upside is not a meme. Now for the parts the bulls scream into the void. Nvidia's ecosystem, the software, libraries, frameworks, and relationships, is a fortress. Developers build on CUDA. Companies train on Nvidia chips. That inertia is mammoth. Also, Nvidia is not just selling chips, it's selling full-stack solutions, hardware plus software plus partnerships like DGX, networking, NVLink. If the next wave of enterprise AI and generative AI workloads materialize and scale, Nvidia stands to capture a disproportionate share of value. Nvidia is the iPhone of AI compute. Once developers and enterprises lock into an ecosystem, migration is costly and slow. That's structural pricing power. Add on the balance sheet power and capital to secure wafer allocations and you have a company that can both invest and defend. That's the bull foundation. Note this as well. Babylon is fallen, that great city, because she made all nations drink of the wine of the wrath of her fornication. Come out of her, my people, that ye be not partakers of her sins, and that ye receive not of her plagues. Revelation 14:8, 18:4. Who is Babylon, and why is God calling you to come out of her? Want more information, please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more fervent requests from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly inspire me to continue bringing to you relevant information. Do not miss out on our future videos. All I am requesting is your subscription. Thanks for joining me today. Your support means so much to me. Do not hesitate to share this video to educate and inform someone who may benefit. Please do watch the next video, subscribe to the channel and share something about today's video. Wish you God's protection. Search the Holy Scriptures as never before, for in them is salvation. See you in the next video as we wait upon the Lord.